Okay, recording this video is Sunday 22nd of June 2014. Hope you had a good weekend. I want to talk about gold and silver in this video because they took off today. We had a huge day on gold and silver on Thursday. So I want to review the weekend charts. And then I want to briefly talk about where we're at on the euro, the yen and the dollar index. But let's get into gold and silver. So it's the weekend. We've got commitment of traders charts out, and it's the usual kind of global macro setup that I look at. I've got two series of charts on each of these markets. We got the commitment of traders looking at the weekly and the monthly chart. Remember, the commitment of traders data comes out once a week, so I like looking at these on long-term charts. And then I take the raw numbers and I flip them upside down because that's the way they kind of work with the price bars themselves, and I look for divergence patterns. So we had this big kind of sell-off in gold and silver, and we've just been basing and basing for a long time and waiting for that. I was waiting for the cyclical energy to be kind of finally exhaust itself and then kind of get going. But a little bit of a surprise for me this week that it took off a little bit early. Anyway, do we have confirmation with the commitment of traders are kind of going the same way? We do. Look at this little blip up in the gold commitment of traders this last week. So we have this situation where it's been above the zero line for years and years because we've had this massive runaway move in gold since 2001, 2002, and this big kind of sell-off since the peak. And now we've just come back down and we've got decent positive numbers here. So we've got commitment of traders support for gold, which is good. Where are we at on the daily and the weekly chart? So again, I look at these, it's the same canned indicators with better sine wave, better momentum, better pro-am. There are no inputs to variables to kind of adjust for these charts with the better indicators. You just kind of use the can version, just put them on. And the reason why I've been waiting for this market to kind of turn around, because on the big picture here last year we had exhaustion sell, bullish divergence kind of comes in and then pull back to end of trend. All these blue professional down bars coming in, picking up those lows all the way down to 1200, and then we had beautiful little Rambo pattern here right at the bottom showing the amateurs getting wrong footed at that extreme, expecting it to kind of continue down. I suppose this has me a little bit worried. I would have preferred to have seen, so the last time around we took off from this pullback to end of trend. We've done our exhaustion bullish divergence and they've been putting in more and more bullish divergence patterns here, and we come back down. I would have liked to have seen one of these blue professional bars on the way down, maybe this bar here. If that was a nice kind of big blue professional bar and then we had a little bit of amateur testing here and then taking off, that would have been more convincing to me. This little U-turn here where they basically got out at 1200, the professionals kind of took profits there and quickly wrote it down. We haven't necessarily on the weekly chart seen them kind of jump in, and even with the explosive move this week we didn't see a blue professional up bar kind of taking off here. So I'm just going to be a little bit guarded, a little bit wary about how quickly this is going to take off. But there's that pullback to end of trend on the weekly chart. On the daily chart here, it was a pullback. We didn't make a dirty end of trend kind of down here. This was the short covering rally that we had all the way up to 1400, and we've sold off since then. This is an interesting little pattern here where we get an exhaustion signal on better momentum showing exhaustion volume with Rambo patterns, all these amateur down bars at 1240 kind of down here. That I always talk about that being unstable. So you've got a huge amount of amateurs kind of selling down here at that point. They all get wrong footed, bang, and we take off. And this is the activity this week. I thought we would at this support level here that we'd maybe bounce off it and test back down again, but on Thursday no, they just took off to the upside. So it's a little bit of a U-turn pattern here, blue professional down bars and then up bars and kind of taken off. I would say with these big blue professional ranging bars, after you have that kind of huge amount of activity there, we're not necessarily going to get a continuation, just straight away kind of sets off. We've exhausted ourselves kind of temporarily with that type of move. It might just settle down a little bit, but as soon as it starts taking off above the high of that bar, which is 1322, so anything kind of in the mid-20s kind of going forward and taking off, that would be kind of confirmation that we've got a move to the upside kind of going on. So I would have liked to have seen this gone to pull back to end of trend. That would have been kind of really pretty, but that's not the way it worked out. But it was second cyclical turn after an end of trend. We've got Rambo down here, we've got Rambos on these daily charts. We've taken off to the downside, and we've done all of this hard work in terms of basing on the long-term charts. During 2013, that sell-off in gold was the big kind of story, and we've spent the first 6 months of this year just basing around that 1200 to 1400 kind of level, and now it looks like we're kind of taking off to the upside. Plus, when you look at commitment of traders, we got kind of confirmation that the professionals are kind of supporting a rally in gold, so might settle back a little bit, but look for breaks into the 1320s to see where this goes next. Silver, now gold and silver, they kind of move very closely together. Look again at the weekly and the monthly chart on commitment of traders, and again you can see the last couple of weeks we've got kind of professional support for the silver kind of takeoff move as well. We've got the commitment of traders kind of trending up like that, so it's all kind of good. It's all been kind of positive above the zero line here on silver. In terms of the weekly and the daily charts, same deal. Nice little pullback to end of trend on the weekly chart. So again, using your weekly charts for the overall kind of trend direction. Here's our pullback to end of trend. We've got exhaustion selling taking us down in this move, and then the bullish divergence comes in. As we come to pullback to end of trend, there's the flush pattern flushing out the last of the sellers, and there's a little Rambo pattern there just hidden underneath that flush signal there. So very similar to the gold pattern. So pullback to end of trend with flushing, exhaustion, bullish divergence, all those good things. Again, same kind of thing here. We had quite a lot of blue professional bars initially, taking off here. If this has only settled back to the low of that blue professional bar, I would have preferred it more. But we settled down, to $19 kind of dollars down here. But then with this week's activity, that's a blue professional bar kind of taking off on the weekly chart of silver. And then on the daily chart, it's a very pretty little pattern, pullback to end of trend with an exhaustion pattern here, and then we've taken off to the upside, breaking above 20 here with jumping the creek kind of bar. This one's we've kind of kept going, kind of continued breaking up through the highs of that. That's again quite a lot of activity there, so I'm expecting it to settle back just a little bit rather than kind of seeing people kind of jump in straight away. I don't think that's kind of the right move. Just wait for it to settle back a little bit, but then as soon as it gets above into the 21s, then that would confirm we're kind of heading up. So there's gold and silver. So nice little patterns, both of them on the weekly charts, with these big trending moves ending with pullback to end of trend, with exhaustion patterns, flush and so on, and then kind of taking off to the upside. So they're going to be interesting to look at over the next several months, because that activity is kind of getting things going, breaking up to the upside, liftoff. So said I was also going to kind of revisit the euro charts and dollar index and so on. Dollar index this weekend on the commitment of traders, we had a really strong signal here. So again, the weekly and the monthly chart on dollar index, I've been bullish on dollar index because we had a U-turn on this whole pattern when we broke down to 79.5. We just touched it and kind of just immediately went the other way. Well, here's this weekend's commitment of traders numbers kind of come out supporting a rally. We've had a little bit of sell-off in the dollar index this week that was a little bit stronger than I had anticipated. Here's the pullback to end of trend with exhaustion, bullish divergence comes in, and this is the U-turn here at 79.5. Blue professional bars, they buy it on the way down, they jump onto it immediately, interested in this thing kind of going to the upside. So we've broken above resistance here, but we kind of lost it a little bit. This was this big bar on euro. All the indices, all the FX currencies were kind of affected on this day, this blue professional bar. This is a little bit weaker than I would have hoped. We've only just marginally kind of broken above resistance here. Would have liked to have just been playing around that resistance level there, but it kind of sunk back quite a bit there. But because the commitment of traders has kind of gone so positive, I'd really think that we're going to work off a little bit of cyclical energy here. We've got a cyclical support on the daily chart to come in, and I think we are going to break back through the tops of this thing and kind of get this thing going into 81s and above. So looking for that on the dollar index. The two largest components of the dollar index are the euro and the yen. So let's look at those. Those are the most kind of convincing. And the yen, I've been talking about the relationship between the yen and the equities, and I was thinking that the yen was going to kind of break out of this above parity level here, but we've never had serious commitment of traders confirmation by the professionals here. Look at this, we've been below the zero line. I mean, huge readings down here, and as we've been basing and basing and basing, they're not changing their tune at all. And in fact, this week's activity, the commitment of traders weakened even more kind of down here. So I don't think the yen is actually going to break up through that parity level. I think it's going to take another move to the downside, and here's why I think that. So here's the daily chart here. So we came down to 95s, Rambo patterns down here, all these bullish divergence, and we have a short covering rally, bang, explosive volume as we start to move back up. Everybody needs to cover their positions. Short covering rally, and it's just run out of juice. We tried to get going here with an exhaustion buy pattern here, and it just failed. A really weak kind of selling down here. Blue professional bar steps in again at the low of that blue professional bar, picking it up. We try to get going. No, just cannot get going. We just got a bearish divergence and flushing out buyers here at this point, and we've come into a little resistance, cyclical resistance on the daily chart, and we've kind of moved away from that. Look at the buying pressure is really weak. So we've come, the last blue professional bar is this one on the way down here. We've come back up into the highs of that thing, and I just think we're going to sink through the lows. I don't know how strong a down move might be. We've traveled so far in the yen, but it's just showing no commitment to kind of jump through the highs here. And if you look at it on the weekly chart, we've got weekly resistance at this level here with Amida up bar. They just can't get it going. So I think the risk is that we're going to actually sink through the lows on these charts and just kind of head back down to 95s. And again, just going back to commitment of traders, we just do not have professional support here to take this thing on. And then the euro, I was talking about this about a week ago. I was saying that the euro, we had a big, let me show you, this was this kind of critical bar here, this huge blue professional bar. I think Draghi was speaking. We had a huge amount of volatility. The euro started to sell off and then rallied all the way back up during that day. It was a massive day. I was saying we need to wait to the highs and lows of those a big ranging blue professional bar like that. You got time to wait to actually kind of confirm which way it's going to go. And we had initially amateur down bars, which would suggest that we potentially could rally through here. The selling's been kind of relatively weak at this point. We've come back up within that zone, the high to the low of that blue professional bar. So we still don't have a proper kind of confirmation as what the professionals were doing there, but I think they were selling down, and here's why. I talk about this. I actually put a Google Plus post out midweek on this. This is one of these straight lines on better momentum here, and you can see where the patterns start to kind of just line up from an exhaustion, bullish divergence kind of close to the zero line. When we have a straight line like that, that's kind of bullish divergence going on, that's slowing the move down. But the market is jaggedy. It always moves through, particularly when it comes to volume, through spikes in volume. And when you get a pattern like that where we've got a straight line going on, we're going to break through that with some kind of big sell signal in order to show like a flush pattern or another exhaustion sell pattern or something like that. We do not just move straight from that kind of activity to kind of above the zero line and it's all kind of well and good and we've just kind of turned around. No, we're going to have some kind of extreme volume event that's going to give us that kind of sell off. And because the support becomes resistance, we're bouncing off this. I think the professionals were selling down in this move here. That was not exhaustion volume that's bottoming kind of down here. That was these 2 or 3 days. We're getting the hell out of this at 140 and selling it down here. We've still got to see an exhaustion pattern on the daily chart on a left shoulder kind of to start to bottom this thing, and I think we're going to come into that this week. We're going to have one of those big kind of sell days. So we're below cyclical support on the daily chart. We've just bounced off this one. Support potentially become a resistance, kind of rolling around here. Remember, we're below support on the weekly chart as well, and so we're in downtrends on these two. We're just having a little bit of a reaction here against this low. I think it's going to work out through the lows of this one with that kind of selling down. And then looking at the commitment of traders, what's going on here? Well, this week, look at this activity. We had these beautiful kind of bearish divergence patterns up here at 140, up at the highs, showing us this reversal, the way the commitment of traders numbers are starting to roll around. And now with this week's activity, the professionals gone below the zero line here. They're kind of not supporting any type of rally. This is a continuation of the move down. So putting all of that together on the forex charts, on the big ones, the Aussie dollar and the Canadian dollar and the British pound are acting very strong at the moment. The weakest ones are yen and euro, but they are the biggest component of the dollar index. So I can see the euro kind of selling off this week. Could see the yen kind of faltering as well, and then we get a little bit of a lift off in the dollar index. Now, not sure what that means. Been looking at the bond charts. The 30-year bond charts are the strongest of the lot, but frankly none of them are terribly strong at the moment. The 5-year is pretty weak. I don't know what's going to happen with equities. The one thing I would say about equities, and I'm just going to point to that chart quickly before I leave you, is that this Friday's activity, well, we had quadruple witching, I think it was on Friday. The range top to bottom during the day on Friday was 3.5 points. It was extraordinary. I should probably do a chart and a whole thing on 3.5 points of range. When was the last time we had points of range that were so narrow? But anyway, it's given us our old friend high volume churn. So this is when the volume is relatively high and the range is relatively low. Kind of make a calculation and see what the churn is, what's kind of going on. The reason why at highs and lows you get kind of compressed range is that the compressed range is coming from sellers kind of coming in and knocking down price all the time. As we're trying to rally and rally, the sellers keep on coming in and just depressing the range. Now obviously with quadruple witching there's a lot of game playing kind of going on that Friday, but it has kind of printed this high volume churn bar. And just look back on your daily chart with these high volume churns. Here's one up here, very small range, very relatively large volume here, and we just roll off from there. Here's another one right here. The last move up here, we had a Blue Professional high volume churn bar there. We've come onto another one there. Backing it down to the 135-minute chart, you can see the same things kind of going on. You can see a little cluster, Blue Professional bars up here, that pullback to end of trend. Whole bunch here, 4 or 5 of them all in a row, high volume churn bars at this bit where we have a little bit of a sell-off. Same thing on this left shoulder here. There's a couple high volume churns, and we're up here at pullback to end of trend on the 135-minute chart. So just watch out at the beginning of this week, because we've got that kind of compressing the range. Could easily see us kind of drop off a little bit. But remember, we're still in a broad uptrend. The weekly chart, we've not come into pull back to end of trend yet, so this has still got that whole pattern to kind of put off. And then on the 45-minute chart, we're also broken above resistance here, so we've got to put in pull back to end of trend on the 45-minute chart. But when I'll be interested to see what happens Monday, Tuesday as we kind of put in those patterns on those time frames, see what's going on, because that's relatively large volume, relatively low range, kind of giving us high volume churn. So that's profit taking kind of happening there at the top. And does that mean we're going to get some strength, continued strength into the US dollar and US bonds, or is it going to continue to flow into equities? I think that's going to put a little bit of a stop on us making too much progress to the upside for a bit. So let's see what happens then. Anyway, so there we go, gold and silver taking off this week, and we've got the dollar index weakened quite a lot, but I think it's going to bounce back this week as the euro potentially kind of starts to sell off. So let's see how the week kind of turns out. Enjoy your trading.